Welcome back to FT Markets. A year ago, Morgan Stanley coined the phrase the Fragile Five to denote 5 countries, Brazil, Indonesia, India, South Africa and Turkey, that were considered particularly vulnerable to financial market turmoil. Indeed, many of those countries have taken a hammering in the financial markets. But over the last 6 months, they've had a reprieve. Now, as the US Fed starts to unwind its monetary stimulus, we're here to discuss the future of the Fragile Five and one member of them in particular, that is Indonesia. I'd like to welcome Edwin Gutierrez, Senior Investment Manager at Aberdeen Asset Management. Welcome, Edwin. When we think about Indonesia, what is the situation regarding the Fragile Five? Do you think it's fair to lump Indonesia in with the rest of those countries?
Well, James, we actually think the Fragile Five is a bit of an amusing term in the sense that when you look at the top performing emerging currencies year to date, 4 of the 5 have actually been these so-called Fragile Five countries. And I think some of the big hedge funds out there kind of learned that the hard way by continuing to bet against these currencies. And the reason why we think that this is a bit of an outdated term is that these economies are dynamic. They have implemented policy responses to this financial vulnerability you speak of. These exchange rates have actually been weakening for the past 3 years. So there isn't a natural adjustment that is occurring in each of these economies, including in Indonesia.
So if we look at this chart here, what does this tell us about the strength or weakness of the Indonesian economy?
This chart, we think, is really an embodiment of that adjustment. What you see here are the FX reserves of Indonesia. And this took a pretty significant hit over the past 3 years, which basically coincides with that currency weakness that's been in place. So we had a peak of just over 120 billion, and in the course of those, well, it was actually 2 years, Indonesia lost about $30 billion in FX reserves. But since then, we've had a nice little bounce, and the Bank of Indonesia has managed to recover about $20 billion of those FX reserves, which is indicative of the improvement in the balance of payment dynamic that is in place today in Indonesia.
So what this is showing really is that one of the key vulnerabilities of the Fragile Five, the current account deficit, is really being repaired in the case of Indonesia.
Precisely. So having peaked at about 4.5% last year, we expect a current account deficit on the lines of about 3% in 2014, which we believe Indonesia is more than capable of financing.
And in the case of Indonesia, we've got a political story too, because President Jokowi just took power. If we think about what he may achieve in his term, what are some of the key economic aspects there?
Well, the major goal, or the raison d'etre of Jokowi, is to improve public investment in Indonesia. If you ever travel to Indonesia, it's pretty evident, pretty clear when you first set foot on the ground that this country has substantial infrastructure needs. Now, we have another chart that we brought today. This shows you the fiscal dynamics in place in Indonesia. One of the big pressure points for Indonesia is the fact that it has to spend a substantial amount of money on fuel subsidies. These take about 2.5% of GDP, roughly equivalent to the fiscal deficit. This doesn't really leave Jokowi with a lot of space to increase public investment, which is what really is his mission.
So if we look at this then, the fuel subsidies are coming down, and this line here, the green line, shows the fiscal deficit coming down too. What will that allow Jokowi to do over the coming years?
Unfortunately, Indonesia is still very much held hostage to international price of oil. So whenever there's a spike in oil, these fuel subsidies do go up. So there is that endemic vulnerability still very much embedded in the Indonesian budget. So Jokowi's mission during his 5 years in office is to phase out these fuel subsidies. Not completely. He wants to target them to the poor who still need these fuel subsidies, but he wants to make sure that these subsidies don't go to people who don't need it, quite frankly, the wealthy in Indonesia.
So in a nutshell, do you feel that if the Fed tightens policy over the coming few months, Indonesia will be fairly immune to the type of market turmoil that we saw before?
It's definitely reduced its vulnerability to these exogenous forces. As I mentioned, these are dynamic economies, these fragile five. There has been a policy response by Indonesia. Its central bank has hiked rates by 175 basis points. If Jokowi is able to be successful in phasing out fuel subsidies, that is also going to reduce one of these vulnerabilities that is very much embedded in the Indonesian story. And we don't want to bet against him. He's had a very successful track record in Jakarta. He's known as a fixer and a doer. So given that, I think we're going to give him the benefit of the doubt.
Thank you, Edwin. So a great deal has changed in the year since Morgan Stanley coined the term the Fragile Five. In the case of Indonesia, the country's clearly done a lot to shore up its domestic and external economic vulnerabilities.